80% of traders are day traders. And why did they choose day trading? Will it be because it brings faster profits and more easier or less stressful, and uses less of your emotions, as everything ends in a day? After 9 years of trading, I found out that the best way of trading is day trading. Nobody wants to wait for 1 month or 2 months for a trade that can still end up in a big loss. We want something better, in a way that you can make a loss and recover it quickly with more winning trades in a short time. Although many traders are making money consistently, while others are still stuck in the losing circle. But hey, today as you walk with me in this video, I will be revealing to you a step-by-step guide to what a consistently profitable day trader does, their secret circles, the pros and the cons of day trading, so that you can join consistently profitable traders in the top 5% league of day trading. Let's get to it. First of all, what is day trading? Day trading is the style of trading where a trader is looking at holding a number of positions for a very short period of time in the market. As day traders, we are out to take advantage of the short-term price fluctuations or movements in the market for a few minutes or hours at most, with the aim of profiting from short-term price moves. As day traders, we use small time frames like the 15 minutes and 5 minutes to make our entries, and we use the higher time frames like the daily candle, 4-hour candle and 1-hour candle to analyze the chart. I will be explaining more on that when I begin to teach you how to do a top trader analysis on the chart later in this video. Now, how can you start day trading? To start day trading, all you need is a laptop or a mobile phone with a good internet connection. Make sure your phone or laptop is not the lagging type, because it will affect you when making important life-changing trades in the future. Telling you from my experience when I started, so you must get rid of that immediately, so you don't make mistakes or errors while trading. Now let's imagine you have a good smartphone or a laptop. Nice. The next step is to get your trading apps or softwares ready and loaded. And for this we are going to be using two trading apps and softwares. The first is MetaTrader 5 and the second is TradingView. The both of them are available on both PC and smartphone. To download the software for your PC, you go to your browser and type metatrader5.com or tradingview.com and download them. And for the smartphone, you can find them on Google Play Store or App Store. I won't really go deep into it, as I have made a long trading course video already on that, their features and many more things about Forex trading for beginners from scratch. But hey, there are some little differences between MetaTrader 5 and TradingView. TradingView is only used for making analysis and gives you the freedom to use a lot of trading tools such as indicators, objects and more. But you cannot place a trade on TradingView. And on the other side, MetaTrader 5 allows you to log into your trading account, execute trades and make your money. But it has less objects and less indicators. But hey, as you go deeper into this video, you will realize that you don't need too many tools to make money in the market. Using only MetaTrader is enough for any day trader who is ready to make money from the market. Now let's assume that you have the app or software set already. The next step is to choose a broker that you can trust with your money and ensure smooth trades and no manipulations. You need a broker that has been around for a long time and trusted by other real Forex traders. You need a broker that has a large variety of payment options like cryptocurrency, bank card payments, virtual money like SKRILL, perfect money, bank transfers and many more, making it easier for you to withdraw your profits and deposit your funds easily from anywhere around the world. And that's where Deriv Broker comes in. Deriv Broker has been around since 1999. Recently, they celebrated their 25th year anniversary. They have been my personal broker for 8 years now and was introduced to me by a friend. And since then I never looked back. They have all the above characters of a good broker, which I mentioned here, with a very good customer support and a large variety of trading assets, from currency pairs to synthetic indices, and even stocks and commodities. I will be leaving their link in the description box below. But hey, here is one pro tip you must know before using Deriv Broker. Always make sure you are withdrawing your profits with the same payment method you use to deposit your money. For example, if you deposit funds with BTC, you will also be using BTC for withdrawing your profits. I did the exact opposite when I started, but thanks to their customer support service. You love the way I am walking you step by step into this day trading journey. Smash the like button and subscribe now to make yourself part of the family. And as you subscribe, make sure to turn on the post notification bell icon so that YouTube can notify you each time I post a new video. Now let's imagine you have your account set up already. We are now moving to the next phase of day trading. As you follow me carefully, everything I just told you is the foundation of your trading success. And now we are about to move to a stronger phase. But hey, I will simplify them all for you. And you will see how easy they will become when I start showing you my live trades before the end of this video. The first thing to understand in trading is to understand how the market works, the market structure. And to analyze the market structure, we will use different tools and strategies to get the best out of it. This is where the top 5% traders are separated from the 95% struggling traders. Now let's see how the market works on a daily basis. The market moves in 4 different stages. The first is the uptrend. This is the stage where the buyers are in control of the market and are aggressively pushing the market higher. They will keep forming higher highs and higher lows until the sellers finally take over the market again. Then we move to the next stage, the downtrend. The downtrend is a direct opposite of an uptrend. Here the sellers are in control of the market and are pushing the prices lower, forming lower highs and lower lows. At this stage, we are not looking to buy the market. Rather, we are only looking to sell the market in order to benefit from the current price movement. But at times, we will be looking to buy and sell at the same time. And that's only on the third stage, the range market. The range market is an equilibrium of the downtrend and uptrend. Here the strength of the buyers and sellers are equal, and we will be looking to buy at the lows and sell at the highs. This stage is the most tricky amongst all, because the market can change at any time and start a new trend. So we must find correct strategies to trade them. And that I will be teaching and showing you soon in this video. The last stage of the market is called the choppy market. This market is considered untradeable, and it's not that we can't trade it in the market. The problem is that we cannot benefit from the highs or lows of the choppy market. The only way it can be traded is to wait for a breakout. And in breakouts, we have the real and false breakouts. And how do we identify the fake breakout from the real breakout? I will show you later in this video. Now let's see how we can trade the trends, the uptrend and the downtrend, and the strategies we will be using to trade them. The first strategy we will be using to trade the trends is the trend line. A trend line is the easiest tool and strategy for trading the trends, but most times, many traders misunderstand it and confuse the concepts of it. But here are the pros and cons of trend lines. First, you must understand that a trend line is drawn from 2 price moves, and not just 2 price moves. In order to be sure of the authenticity of the price moving in the direction of the trend, we must make sure that the second price move broke the last move of the trend, like this one here, which is a lower low. We must make sure that the price broke this lower low. For real, I have seen many traders who compromise trend lines. Some will take trend lines that did not even break that move, like the one you see on the chart. And that is impatience, because when price returns back, it will take away the trader's stop loss and then return to continue the trend. As you look at the chart and pay attention to this trend line, I must tell you one more thing you must never do when drawing a trend line. When you are drawing a trend line, make sure that the line did not cross the body of the candles in the first move of the trend lines. Those 2 price moves on which you are drawing your trend line on. This will not only make your trend line perfect, but it will also make you disciplined from adjusting your trend lines over and over again, just because you want to catch the move of the market by force. Never make the mistake of drawing your trend line on the body of a candle. Keep it on the wicks or inside the wicks. Do not cross the body. Now when you have the perfect trend line, you will now wait for price to return to the trend line. And from there you can take your trades when you see the entry candles that I will be showing you later in this video, when I start teaching you on the best day trading candles that every trader must know, as you follow me carefully on this day trading journey. The second strategy for trading the trends is the support and resistance strategy. Although support and resistance strategy works in trading all the stages of the market, it really works better in trading the trend. When using support and resistance to trade the trend, we are looking for something called the flip support and resistance. The concepts of a support and resistance are in two ways. The first one is the type that you draw out to support line or resistance line. Then you wait for price to return to the line and move the market from there upward. This way you can get in on the trade early. But there is a second way of using the support and resistance line when you are looking on trading the trend. This is called a flip zone. Big one. The flip zone occurs as a situation where the market turns a resistance zone into support zone or a support zone to a resistance zone. This flip zone must occur consistently on the chart for we to say the market is moving in a trend. When you're in an uptrend, just like the one on the chart, you will want to see the market flipping resistance zones to support zones consistently. This indicates that the buyers are in control and active in the market. So each time the resistance is flipped, you will wait for price to return to the new support zone. The flipped zone is only used once, and after that, you are expecting the market to form another flip zone, fresh, from which you will take another trade entry from. It's as simple as that, because that indicates the continuity of the trend. But hey, listen attentively. There is a key to the flip zone. Not all prices that return to the flip zones are taken. There are many prices that returns to the flip zone only to change it to another zone. So how do we avoid that? We must look out for a price gap before it returns to the flip zone. This price gap is very important because it helps to make you understand how active the buyers were in flipping the zone to a support zone, and it will give you a clear understanding and structure, so that when it touches the now support zone, you will expect a quick trade from there, and you will take the trade from there. Now I am about to show you the two pro ways of using the flip zones, and I never thought I would share it for free. But hey, here you have it, my subscribers. Lucky you. There are two ways of drawing this. First is this type that I have already shown you. You just have to wait for a quick breakout with a nice gap. Then wait for price to touch the zone before you take the trade. But there is another way of trading. Sometimes the market will do something like this. It will not give a price gap before retracing back. And in that case, we don't consider it a flip zone yet, because we don't see it flipping the zone. It has not yet proven the strength of the buyers or given us a clear structure to enter the trade. So what do we do in this situation? Teach me, boy. It's very easy. We draw out the line much longer to catch the future price moves. We wait for the price to break out of the failed flip zone, and then later wait for price to return back to the zone comfortably with a good price gap. The failed flip zone is no longer relevant. If it was, we would not wait for the second price move to return to the flip zone. Most times when price move like the failed flip zone, it is always a reversal plan that was supposed to break out completely and change the trend. Since we then luckily get the second move breaking out to our primary target trend, we will take advantage of it by waiting for this second price move to return to the line. And then we take our trade from there. It is more like what is happening here on this chart. Pay attention. The first flip failed. The second flip is now successful and has returned to the line to take trades from the buyers, which gives us our golden opportunity to enter the trade and make money to buy a Lamborghini or Ferrari. You can do the same thing for a downtrend. But hey, actually you won't see this opportunity in all the trends in the market. And that's where discipline comes into play. Always wait for this setup before entering the trade. It is very clear, simple and important. Now let's see how we can trade the range market. Note of warning, we are only looking for one opportunity. In a range market, anything more than that, you are just going to watch your profits taken back. I know there are many traders who will tell you that you can take as many buy and sell trades. in a range market as you want, as long as the market keeps ranging. How do you know that the market will keep ranging? A range market usually happens along the trend or at the end of a trend. And as long as it keeps ranging, there is an assurance of the market breaking out from one of the two sides of the range market, either from the high or from the lows. Now that you know that, you can see that there is no need for trading a range continuously, because the breakout can occur at any time. What you will want to do is to get in early in the range market position. And how do you get in early in a range market? You do so by first understanding how the range market works. In order to identify a range market, we will first of all draw a box on the first 4 points of the range market. The first point is the beginning of the range, the second point is the first high of the range, the third point is the first low of the range, and the fourth, which is the most important, is the second high of the range, which confirms the range. The fourth step of the range is very important, because without it, 1, 2 and 3 could just be a normal trend movement. When we see the fourth step, it confirms that the market is moving in a channel, and the next hit will be a chance to enter the trade. Immediately it touches the box again. And after that, you will place your take profit level a little pips below the box, and your stop loss level a few pips below the box, just after your entry. Then you can say goodbye to that range, and be looking out for another trading opportunity somewhere else. It's like a hit and run. And as day traders, all we do is hit and run. You don't want to trade a particular market so much that you will make profits and still give it back to the market. Then another trader somewhere in the world will take your profits and spend it on his girlfriend. According to my experience and research, I came to notice that traders who desire all the profits in the market always end up making nothing from the market. If you want each and every move in the market, by the end of the day, will be left with nothing for the day. Just like you can enter a trend late, the same way you can enter a range market late. Trading less will boost your discipline and make you more focused on better entries. And as we are approaching the point where I will show you my live trades, this is another way of trading the range markets. We will be using the supply and demand. Supply and demand represent those areas of aggressive buying or selling in the market, where the market will always be interested to return to. These areas are very strong depending on the aggressive move to the target direction. When trading demand and supply, I want to see the market moving fast from a particular zone. It could be some color candles moving in a row to the target move, or a very fast price movement without any choppy move. After the market has moved very fast from the zone, you draw out the last candle before the aggressive move, just like I did here, and you wait for the price to return to that spot. And when it does return, we will be looking at buying or selling from that particular zone in the market. You can see I did the same thing here, because there was another aggressive selling pressure from that zone, and when the price returned to it, it fell drastically. You must also understand that a supply and demand zone is drawn and used only once, and after the first return, you should delete the box tool and wait for another fresh supply or demand zone from the market. Imagine I stretch this demand zone further to this side. I could have lost the trade because my stop loss would have hitted successfully. So sad, and that's bad for a breadwinner who is out to make his daily bread from the market. So to avoid unnecessary losses, use the supply and demand zone only once. Now into our fourth and final stage, how to trade the choppy markets. The choppy markets are small and tradable movements in the market. They are not trending, and they are not in a range. Though when you see a choppy market in a higher time frame, it could be small, but it is actually a small representation of a bigger trend or range happening in a smaller time frame. For example, if this choppy market formed in a daily time frame, it might look like a choppy market, but in a smaller time frame, like the 15 minutes and 5 minutes, it will have a huge impact on the chart there. But if it happens on a small time frame, it is considered a choppy market, and it is not tradable except you do what I am about to show you right now. Choppy market comes in two ways. Some come in triangular forms, while others come in a range. These are the factors that make up a lot of chart patterns. And just like I have taught you guys in my previous videos on how to trade chart patterns, we will be trading the choppy markets the same way. All you have to do is to first of all draw out the choppy market. It could be triangular or range. It does not matter. And after you have drawn it out, you wait for a breakout like this one and allow the market to make a retracement to the choppy move. For a triangular pattern like this, make sure you wait for price to retrace to at least half of the move. And for a range, just make sure the market retraces and touch the range box. Ensure to wait for this retracement before looking for an entry candle and taking your trades. Now the time has come for you to know my strategic entry candles for day trading. I use these entry candles almost every day to make my trading decisions in the market. The pin bar and the momentum candle are my top picks daily. When a pin bar shows up at a target entry point, it signals that the forces, either the buyers or sellers in that stage of the market, are pushing market aggressively to the target move, giving it a long rejection or decline to the target direction. I will show you my live trades where I use these candlesticks for my analysis before taking my trade. The momentum candle shows up as candle with little to no wicks. They represent a full decision by the buyers or sellers to finally take the market to their target direction. And they are very effective after hitting a strong zone in the market. These two strategic candles are my favorite day trading candles, and they represent very critical decisions by the buyers or sellers in the market. Let me show you a trade I took of recent with one of these candlesticks. I made this analysis on my charting software using the supply and demand strategy. First of all, I noticed an aggressive buying from this side of the market. Then I drew my rectangular box from the last candle before this great move, and I stretched the box to the future. And for the first time, the price tried to touch it and printed out a pin bar candlestick, but nearly does not get a bird. We are working with rules here, and we cannot break them. It must always touch the zone. And when the price finally touched it, I spotted a pin bar candlestick, which is our major day trading entry candlestick. Then I went to my MetaTrade app and took the trade on my Deriv DMT5 account. This is when the trade was moving to my target buy direction already. And this is when it was about hitting my take profit target, which it later did. I shared the full process on my Telegram channel. And that day was so good that I ended up giving them some free signal calls on my free Telegram channel, which performed really great before the final closing hours of the market for the week. We really went home balling. I also took this trade on that day, using support and resistance. When you are trading, always make sure you place your take profit target at the next high or low, just like this one here, and that will help you take your profits faster and safer. I didn't use a stop loss for this trade course. I was using a small account of $2,000, which I was not afraid of losing. Though I won't try that on a bigger account. Always place your stop loss a few pips below your entry to avoid huge losses on your account. If you follow everything I taught you in this video, you are going to become a problem to the brokers. And that's great, because our goal is to make the brokers broke. Don't forget that. Tattoo it on your laps. And make sure to subscribe to make yourself part of the army of Trading Tribe family. And hey, here is a big announcement for you all. I have finally launched my long-awaited trading ebook, The Blue Man Strategy 2.0, and inside this ebook contains a clear map for a daily trading, all the way from the only market structures you should trade to the structure entries and more than 10 entry candles that have made for every profitable trade I have taken since my 9 years of trading. Any person willing to take day trading very serious this year will have this ebook do wonders for him or her on the chart. To get it, check the description box below for a direct Telegram message link to get to speak with me. You get a video description of the ebook for free immediately after purchase. Though I didn't talk much about day trading psychology in this video, and that's because I have made a special video explaining the 7-day trading lessons I wish I knew earlier in the beginning of my trading journey. And a lot of traders are still making these mistakes daily. Watch this video so you don't repeat those mistakes in your day trading career. My name is the Trading Chief, and it's a wrap for this video. See you in the next one.